Okay, which that brings up a really good point. When it comes to tax-free, is how I choose to pay my policy impact that, whether I have the business pay for it or David Rice pays for it? How does that work?
Yes, so we highly encourage our clients to pay for it individually out of pocket, and you want to make sure that you do not deduct the premiums on your tax bills. The reason being is if you deduct those premiums, which it's a type of health insurance, so technically you could deduct the premiums as a health insurance cost. What happens then is you're not paying taxes on that amount of money. And so Uncle Sam will deem it to be, if you were to ever go on claim, they want their cut. So then your benefits would be fully taxable at that point. So we recommend, even though it'll cost you a little bit of money in savings, we're not talking about a lot. You know, if you have a $2,000 per year premium, you know, maybe you're looking at $500 per year in tax savings. It's not a huge amount long term, especially when you're practicing full time and making the big bucks. But we highly encourage not deducting those premiums, and that way if something happens, you get the benefits tax free. Now, if you write the premiums out of the business, which could be done, we don't recommend it typically because it just kind of muddies the waters a bit. You want to make sure that you do not deduct those premiums as well on the business aspect. And we also recommend you work with a qualified CPA or tax advisor if you start looking into that to make sure that they can help you ensure if you were ever go on claim, your benefits would receive tax-free.
Please pay attention to that point, because a couple $1,000s tax-free versus paying taxes on it is massive.
Well, I mean, $5,000 per month tax-free is $60,000, and if you're paying taxes on that, it could end up being only 40 or 50, depending upon what state you live in federal taxes at the time.
Yeah, it's crazy. So how about if I'm a young dentist and I'm looking to go own my own business?
Yes.
I've heard that some banks would like me as a young dentist to sign my policy over to them. How does that work?
So this is a big issue that the banks don't care. They just want to make sure that their loan is covered should you go on a claim. It's very common for banks to provide loans to dentists, but it's also very common that they want those disability insurance, personal disability insurance, assigned over to the bank. So if you go on a claim, they keep getting their money. So we really discourage that. We do not recommend doing that for any of our clients, and for educational purposes, any of you out there, I would definitely look into your options. There is a disability insurance policy you can purchase that would repay the bank loan directly to the bank that they will accept. But oftentimes they don't bring it up because it's easier for them to assign the policy. So I would recommend, it's called a business reducing term policy. It reduces the term of the loan. As your loan goes lower, the benefits get lower, and it's a very inexpensive policy. I recommend everyone with a business loan to take one of those types of policies out.
That makes good sense.
Don't ever assign your disability insurance. That's for you, your family, to put food on the table and to continue to pay your mortgage, etc.
Yeah. So we're in the home stretch.
Okay.
Thank you. We touched a little bit earlier on the difference between an association-based policy, an employer-based policy versus an individual policy. Are there any other things that we should talk about in that space, or did we hit it?
Well, association plans, employer plans, they're great. Don't get me wrong, it's a great value. It's relatively inexpensive, especially as you're younger, but oftentimes as you age, those policy premiums will get higher and higher. So another big factor, because they are not non-cancelable, the premiums aren't locked, and not only are the premiums not locked, they can change those on you virtually at any time for the most part. So you may be looking at paying a very reasonable and small premium right now, but when you're 55 years old, that premium could be 20 times what you're paying for it now. So that's a big difference now. It actually could end up costing you even more money through one of those plans versus if you paid a little bit more now, got the high quality stuff, and just had it played flat level forever. Other items they're typically not as comprehensive. They almost, not always, but most of the time don't cover mental, nervous, and stress-related disorders for the full time frame. And really just be wary of what you're getting yourself into. And again, I would recommend working with a professional that can help you look at those types of contracts, compare and contrast to see what the best fit is for you.
Yeah, I like that. Compare apples to apples. And I'm gonna challenge the associations for a second right now, because I've been an active member of one for 24 years now, and I used to believe, before being really involved, that I was going to get the best rate possible for an apples to apples plan. And what I learned is that isn't always the case, because associations are in business to not only help us, but to make money. They're a business just like we are in our practice. So make sure you have somebody who really knows what they're doing, evaluating your policy, giving you all the information so you are comparing apples to apples.